On stage is Henrik Olsen of Environmental Technologies Fund. Welcome to Ecosummit, Henrik.
Thank you. Thank you. So, well, I know some of you here in the room, but not all of you. And I should just tell you who I am and why I'm here, perhaps. So my name is Henrik Olsen. I'm Swedish originally, but have lived and worked here in London for a long time, over 20 years actually. And I've, since the mid-90s, worked in venture capital and growth equity, investing in great growth businesses all across Europe and in the US and also in Asia. And throughout that time, I kind of always ridden the technology curve and new trends and trying to capitalize on these new trends and really help grow companies fast along the lines of what you all mentioned earlier on. When in the early 2000s, I've started to think a little bit about the environmental pressures around the globe, and very early on started to think about creating a fund around this idea. So I got together with a couple of my partners to start what we call the Environmental Technologies Fund. And the reason was really to try and promote and help entrepreneurs build great growth companies that have a big environmental impact. And we were going to do that with the help of institutional capital, so pension funds, insurance companies, etc., which we have done. And I think I wanted to share some of that with you when we talk about capital efficient companies, because I'm not quite sure myself what a capital efficient company is actually. So, and I'm going to share some thoughts around that because I think there's a lot of confusion around this. But before we do that, I have a slightly different slide compared to Pedro's slide, summarizing broadly what you said earlier on. And of course, your timing was perfect because you backed up my slide. But this is one way of summarizing your slide. By saying that, look, the fuel's running out here. We have a limited amount of resources, and the reasons why we're all here in this room, I think, is because we're trying to basically make better use of these resources. And whether that is through smart technology solutions or other solutions, it's really to try and capitalize on what we got left and try to be more efficient in terms of how we use that. And when I talk about capital efficient businesses, actually capital falls into this category as well, especially these days. So while it was slightly a leading question, Pedro, and when I asked, how we're going to finance all of this, and that's a real issue for us. But one of the ways to do this, and I think you've given it away a little bit, which is, every case is a separate business case. And I think you have to think about it from that perspective in order for it to truly be sustainable. You can't wait for other people to pay for this. This is actually going to have to pay for itself. And that's how we drive growth in some of these companies. So if you think about capital in that perspective, I'm going to share a slightly more detailed slide now with you. This is something that the Cleantech Group produces on a quarterly basis, and it's basically the volume of venture capital at a global level being invested into clean tech every quarter. For the last 6 months, roughly $3 billion, so this is in dollars, have been invested across more than 400 companies around the globe. But there's really two things I want to point out on this chart, and that is, one thing is that Europe, and I think I'm talking about the European constituency here, represents only around 20% of that capital. The vast majority of this capital is obviously going into the US, and some of it is going into Asia. And there are smaller pots going into Africa and Latin America, which are also incredibly fast-growing areas, but relatively little capital actually is going into that area. But there's another element to this chart, and that is that you see over time the number of investments have increased quite dramatically if you look back in 2005 versus today, but actually with a smaller amount of capital. So when you think about capital efficiency, is that an indicator of a more efficient model? Well, there are other ways to explain this. If you look at 2007, 2008, Those years, you have a lot of capital going out. I mean, you see big bars in that area. That was probably the peak of the investment period, and characterized with a relatively small number of investments. And those investments, they were, to a large extent, large ticket sizes going into infrastructure. So deploying relatively new technology into, for instance, the biofuel sector, where it required large sums of capital, but relatively little scalability in terms of those investments. So I think what you should take away from this is that in one way, more capital is being deployed, yes, over the long term in this area, but actually we're investing it into more different things today compared to what we did 5 years ago. And I think that's a good thing, actually. So what does it mean to build capital-efficient companies? Well, I'm just going to give you a couple of statements here and talk them through, because as I said before, I'm slightly confused myself what it actually means. But a lot of people talk about scalable business models, and I think this is a term, almost like a business school term, that has been incredibly misused. Now, when you think about scalable businesses, you probably do think a lot about IT and perhaps in particular more recently on the internet. But I'm not always convinced that that is a very capital efficient way of doing things, simply because today, if you look at launching new products and new ideas into the internet, well, in many cases you have to give them away for free to start with in order to build your population, and that somebody's paying for that, obviously. So there's a lot of capital going into this. So the actual acquisition cost per customer on the internet is increasing dramatically. And I think you have to bear that in mind when you think about other industries, because I would argue that actually there are some manufacturing models that can be highly capital efficient and highly scalable if you do it in the right way. So, this is not black or white. This is about scaling businesses in a resource efficient way. And that's how I think about it from a scalability standpoint. The other thing I think about when I think about capital efficient, it's really about being adaptive and flexible in terms of your business model. So I'll give you an example. One of our portfolio companies, we make an electronic device that's manufactured out in China. And we set up our own factory. We started to build the stuff out in China, and then we started to look at alternatives. How can we? It was quite expensive actually, with the labor costs going up in China quite dramatically and so on. For us, we started to think, how can we do this differently? So we actually partnered up with an outsourcing company who specializes in electronics manufacturing, very similar to what Apple is doing actually with all our iPhones. Fortunately, our workers are treated slightly better, but that's a different story. But when we did that, suddenly we had a much more capital efficient way of doing our manufacturing, because suddenly we benefited from the scale of the outsourcer, and we immediately had a saving which was roughly around 10% of the turnover of the entire business by doing that. We also improved our working capital by a couple of million overnight. So, there are a lot of things that you can do and be adaptive in terms of your business to be more capital efficient. And it kind of brings me on to the third point and the final point here in terms of how you be more capital efficient, because I think it is a lot about discipline. It is a lot about thinking about every euro that you put in or pound that you put into your business. You need to think about, where is that going? And I think that's a mentality in a lot of companies that are doing it well. They actually think about that. They have thought, they got a long-term plan as to what that capital is going for. But also, discipline means to be critical about, am I doing the right thing? And constantly reassess what you do. So it doesn't necessarily mean that you have to stick to your plan. I think, again, being adaptive and being able to adapt your business model and how you spend that incremental money is essential for your business. So I think this is just some thoughts around how you can be more capital efficient in your business. Jan actually summarized it quite well. I think you said smart business is about being fast and spend little money. Well, that's a good summary too, I think, in terms of being capital efficient. One thing I wanted to share with you was, however, in terms of being capital efficient in Europe is something that we have been for a long time. We haven't been flooded with capital in the same way as, for instance, it has been in Silicon Valley, if you take some of those examples out there, because if you look at the total capital going into Silicon Valley and you look at the return on that capital, it's pretty appalling. But there are some great success stories, nevertheless, coming out of that. But it's not a single answer. And I would argue that when it comes to green solutions and industrial technologies, in Europe, we're actually doing a great job. We have a lot of innovative technologies, and I think today is actually a great showcase of that. So, we've got some great companies here today, thanks to Jan, and I think you'll see a lot of interesting solutions, which is exactly that, capital efficient solutions. So with that, I thank you, and I'm available for questions.
Thank you very much. Did you tell people that you did a first closing?
Yes, or a second fund. No, I didn't tell people that, but I should do. But,
you have money.
We have money to spend, so we are investing in businesses. Absolutely, we're in business, and we just launched our second fund, which is very exciting. So thanks for mentioning that.
And you raised how much in the first closing?
Well, we have around 70 million euros in the first close, so a little bit more. Yeah.
And it took you some time, right? It wasn't very easy.
Raising money is not easy in this environment, and I think a lot of the companies know that too.
Yeah.
It's a tough, but I think persistency pays off.
Yeah.
Yes.
And you made it. It's great.
Yes. Yeah.
So you will be in the clean tech investing business for a couple of years, eh?
Oh, many years.
Many years.
I hope for the rest of my life.
That's the right attitude. Henrik, thank you very much.
Thanks, John.
And here's your book, The Crystal.
Thank you.